Good morning, video morning brief of the U.S. stock market. Rich Pos for Critical Point. It's Tuesday, February 18, 8:36 a.m. Eastern Time. Okay, this is the 3-hour chart, 6-hour chart of the S&P 500 futures, and overnight they were higher still. They were higher during yesterday's trade, the extended type holiday trade, and this has taken longer than it should have for level 3 top. It appears the last 2 days of last week, they got excited about the strength in European stocks and the rest of the world holding up fairly well. They got excited about the ECB for the Eurozone lowering interest rates to help out with the economy. The UK, England lowered their interest rates to help out. And then the UK, after they lowered interest rates, their GDP report came out and it actually picked up a little better than they thought. So this kind of encouraged that the world's trying to be stable here, even while the U.S. is going through all its political issues and trying to beat up on the world as well, and the tariffs and this and that. I think they're kind of saying we can have a lull a little bit on this tariff stuff, kind of drag it out. And at least we're working on global economies, and the U.S. economy is still hanging in there, even though there's cracks in it and things that can go wrong. And even though some of the 12-month forecasts being done on Wall Street now are showing things are going to slip on the road, and even though we have a jump in inflation, at least we had the producer price index saying, wait a minute, don't get too excited about that inflation. It may not be going through the entire system of inflation, the entire calculation. Maybe it's not as strong as thought, okay? However, Mohamed El-Erian came out over the weekend with a chart also showing specific components inflation, and it looked pretty strong to me, okay? But the interest market actually took a nosedive last week, which was out of character what it should have done. It is trying to move up now, and it should fully recover this week into next. That may yet bother the stock market, but as of overnight, the stock market shrugged off the little up move in interest rates. It also shrugged off some of the buoyancy in the dollar, just saying it's not an important enough move yet anyways. And again, I think they're focused on those European stocks, which are now outperforming the U.S. stock market by 9%. It's been a big run for them. And even though they have their Russia issues, it sounds like, and even though they may have to rebuild their military and take over on their own, and U.S. bows out, I think they're also saying it's possible to get peace and then have to rebuild Ukraine and Russia rebuilds. I think people are saying, sometimes economies do well during war times, that people rebuild, they spend money, and Europe's going to have to print some money, okay? So I think all these things are coming in factors here that's a little bit weird. Don't see this all that often. That's making them a little more optimistic, and I think people have said they sold enough stocks in December and January to make themselves feel a little more comfortable. And Wall Street has been saying all along, someday that money can come back into the stock market. And, if they keep chipping away these record highs, pretty soon both bulls and bears are saying, well, gee, there just doesn't seem to be that a serious reason to sell. That maybe we can take a lot of bad news and still put this market up. Well, the U.S. stock market has a history for 100 years of going up on bad news, so we do have to consider that. All right, so where we are for the level 4s, well, again, the 3-day holiday may have distorted things because they trade the futures on that third day when the cash market's not open, and it does distort things for our modeling. But what the model is saying is there really ought to be a level 4 top today, and the stock market ought to be down into tomorrow for a level 4 interweek swing. You can also day trade it, the major intraday move, that kind of stuff. All right, that's the level 4, pops and drops day to day. Zooming out, the model's saying, really, this is now starting 1 week too late for level 3 once a month sell signal. And the last one was around January 24th, I believe. Okay. And what it's saying is this is too late. And yet as we dig deep, we can see that it's possible that holiday trade yesterday caused a distortion, should ignore it. And so if it will start down today and go lower tomorrow, we'll have an opportunity for the absolute latest allowed for level 3 top. So I've decided to set a time stop and say if the stock market's higher tomorrow during the cash trade, I will ignore the futures. If it's higher during the cash trade, then I should assume the level 3 top did not occur today, latest allowed, that it's actually going out, was back on February 7th when I originally called it. And there's even a chance it was February 11th. And then I said we got to give it one last chance as of last Friday, and it looked like it was working. Now it's not. And it is too late, and I may be making a mistake by giving it yet another day here to show us some evidence that we ought to give in right here, right now, and say, no, that top was back in the 11th or 7th, and we've got an uptrend. And if so, it's probably up all of this week into next for the next level 3 top. So that's the problem here. This might be a buy moment to be bullish the next few weeks and still be bearish sometime in March. Now, we also need to keep in mind that seasonally, the stock market goes lower from February 16th into March. Now, that's just an average. It's popular, it's well known, but the market doesn't seem to pay any attention to it as of this morning. But it's just getting started. Last year, they actually held the market up into early March, then knocked it down just that 1 week and then put it up, and that was it for the seasonal. And I correctly said that. I was very, very proud of that there really wasn't going to be much going on there. If you go back, I forget, 2, 3, 4 years, you'll find another time that it went up right to the end of February, and I said it should not go higher into March, but it wasn't going to top February 16th or so. It was going to top near the end of the month, and it did, and it was down in March. So we've had some success trying to fine-tune it, but right today, I'm uneasy here of is there any fine-tuning with that seasonal? I just don't know, is it going to work or not? And I must say, they don't seem to be discussing it out on the chat box and Twitter, and I have noticed some people have disappeared on Twitter who are actually conservative type Wall Streeters, and they're not talking as much as they used to. And I haven't seen as much as that seasonal discussion. But it's something to consider in coming days and the next few weeks here. All right? So at any rate, this could be a last-minute sell signal for level 3, and it's down. Now, the problem is we're looking for a level 3 bottom, and it's already due. So I'm a little nervous it's only coming down just for a day, 2 or 3, get that level 3 bottom, and it's going up anyways, that they want to push this higher into the end of the month on into March, okay? And that they just, I think they're getting tired of waiting for it to go down. And they're just saying, well, what the heck, let's just try the buy side and see what happens. I don't think it's smart, rational buying, but I think it's enough that we might be having some complications for our larger trends that I'll discuss in a moment. At any rate, one last chance here. If it's higher tomorrow and later in the week, I got to assume it can be higher into next week. All right, that's the level 3 scenario. Start trading below any of these overnight lows, okay? Can be a signal of turning down. And if I go to the S&P 500 cash, if it trades below the low on Friday at 6,107.62, not only is the level 4 down, but we may have an opportunity that level 3 trend is down. And they're going to open it higher this morning. The futures are now up 23 points. There's going to be a little gap up. That may be a reason for them to sell it, but maybe they only pull it back in and buy it. If they pull it back in and then take it higher later today, I think we had some problems here. This thing's more bullish than I desire, more bullish than what I've been forecasting. All right, let's go to the cash market, S&P 500. Friday, it sat there and did nothing, and that was just because they wanted to polish the week off, and that's concerning that they really aren't nervous about bad news coming from Trump anymore. That's fascinating. Interesting change of character, all right? So the next thing is it may be best just to try to be bullish the next few weeks, sell for that late March, April to drop. In the meantime, be bullish, give the bulls a chance here that they actually want to put this higher. And so be bullish until it trades below the low of February 12th at 6,003.79, that it may be worth jumping in there. Daily chart was getting close to overbought for another sell signal, but it was acting bullish on Thursday, Friday. If we go to the S&P 500 futures, we can see what they're doing overnight. They're putting it up. They're a little bit cautious whether they want to do it. They're getting near the record high. They're wondering, are they paying too much or is it just going to keep on going? And again, I'd like to give them today at least. It's okay to buy it, but you may want to sell it a little later if it comes down. But I'm also concerned there's really limited downside. And unless something really blows up on this tariff side, and unless the interest rates really soar, I'm not so sure they're going to pull it back that much for this level 3. All right. And I am concerned that I'm running behind now, that they just keep chipping away at that resistance, that record high price, and they're eventually going to push it through, and then that's going to get them even more excited. Okay. All right. Now, as we move to, I think that's what all I want to say there. As we start seeing negative days in the next couple of days, hopefully that means level 3 pullback. And then as we go out to the weekly chart, if we can get a negative week, it means we're finally back on track here of a larger down move. So let's take a look at this weekly chart. And what we have is, that looks like a strong week last week, but it was really only 2 days. The rest of the week it was not strong. So, what got them excited? And I still think it's this Europe stuff, and then a lull in tariffs, and then the realization that in March we might not shut the government down in the U.S., even though we have a debt ceiling there, that they may deal with that. And so I think this market is starting to get a little bit relieved that, we always have to deal with bad news. But in general, the stock market goes up all the time. Okay, so, all right, so we have to watch out that they're going to put this higher into early March, then down into late March, April for the level 2, that they can put it up into the end of February and then down into March. And they can also top it out this week, next. So we have this whole range of time, unfortunately, that we got to throw darts once again to see, is this a very important top, or is it just a level 2 top? And even if it is on level 2, it's supposed to go down in March. The model's saying we might have to get more bulled up here. Maybe this thing's going up all year long. Maybe it's going up even higher by April, but it ought to be down late March, April. And it can start now in the next few weeks to go down into late March, April. Then it should be up in April, back down May, June, July, and it may be down a lot. But maybe we should worry less about that now, because they sure feels like they're trying to get going. I mean, look at this behavior. They slammed it down December, Jan. We did a fantastic job keeping up with that, called the bottom, everything. They slammed it up, pulled it back about halfway. That's so far standard operating procedure, even in a bullish move. Then they put it right back up again. So again, they're chipping away from December to now, chipping away at that record high. This may have been like a pullback before jumping over that record high. The bull ran for the fence, then he stopped abruptly. He backed up, and now he's just going to jump over it. Okay? And that still means they can sell it late March, April, or sooner and into it. But it may mean that things just aren't going to be that bearish after all, that we got to wait to May, June, July for the more serious bearishness. We may be sideways to up actually into April, even though it's supposed to pull back in March. Okay? So another way of looking at this, be bullish until we can give yet another level 3 sell signal next couple of weeks. And in the meantime, if it trades below the low of the week of last week, 6,003.79, then we've got some evidence we're right. It can go lower in the late March, April. Right at the moment, we're running out of evidence. It's starting to go away on us. It is overbought in this weekly chart, but it did not make a sell signal by the end of the week. The Dow Jones not acting as strong as the S&P 500. And I like it. It should be topping for level 1. I think the model's got it right that it is a level 1, whereas debatable what is it for the S&P 500 and perhaps NASDAQ. So if we can get this market trade below last week's low at 44,104.48, I think that's a development that it can go lower. In the meantime, what I'm saying is maybe you ought to backpedal here a little bit, be a little bit bullish friendly here. Maybe buy little setbacks and then be willing to be flexible and get out yet again, because they sure seem to be getting more serious about putting the market up. Now, as we look at the percent stocks above the 200 average, it really didn't do much of anything last week. It's still well off its highs, not that great of not that big of a deal. If we go to the NASDAQ 100, we can see that it had been dragging its feet. It's caught up now more with the S&P 500. That's probably because of NVIDIA and the Mag 7. But at the same time, it has not gone to record high for the futures at least. It could be putting in level 1 or a less important level 2 and go down into late March, April, and yet it can stay up a few weeks. I'm going to use for the NASDAQ maybe the week of March 3rd that if it's going higher, that's going to be a time stop to tell me that even though they're probably going to knock it down in late March, April, it's probably going to be right back up and higher still by sometime April into May. And so I'm going to work with that time stop to help us out for additional information. So we have a time stop for tomorrow, that if it's higher tomorrow, we might want to err on the side. It's not going down much and can actually be higher by next week. We're going to have a time stop in early March to tell us to be bearish into late March, April, but to also be bullish in the sense it can be right back up by April into May. All right. And the more seriousness, bearish, negative, probably is not May to June, July, that we're just not going to get enough of all that serious bearish stuff going on here for a while. Now, we get a down week now in the next few weeks. That would also be a bit of a symbol or sign that it's put in at least a level 2, if not a level 1 top, and is on its way lower into that March bottom. Interest rates in terms of driving the market, basically, it's blipping up a little this week, and that was very strange, weird behavior to slam it up last week, slam it down. And again, I think it had something to do with the ECB and the UK lowering their rates. I think it had something to do with the producer price index countering some of the higher inflation of the CPI index. And I think it had something to do, most of all, with how well the European stock market is doing, okay? And China's stock market picked up. Japan showed some stability. The overall world did fairly well. And China's working on still more stimulus and try to stabilize and put some things out there. I think it just encouraged everybody that, hey, stock market should have been weaker than what we've seen over the past 30 days if there was real serious problems for the economy, and it's just not there. We got cracks in the crystal ball. There's things going on that are not right. There's things that can deteriorate. And I will say Carl Quintanilla over at CNBC put up some headlines from various news channels of showing many large companies laying off 10, 15% of their workers here. It is something to consider. But again, maybe that's why the model's saying, well, the worst downside is May, June, July. And maybe this downside in late March, April, early April isn't going to be all that serious. It's going to take a while for some of this negative stuff to work through and give us a problem, a complication here. All right. I look at Mag 7. It's rebounded to fill its gap. Where's it going to go now? The model's kind of stuck in a rut, doesn't know. I'm sorry, that was NVIDIA. A Mag 7, however, really did not perk up that much last week and kind of is in line with the equal weighted index that's still saying there's a chance everything's going lower in March, April right now. All right. It's dragging its feet. All right. And I think it's already topped. And I think the Dow Jones is dragging its feet. It's already topped. But the NASDAQ and S&P 500 are kind of like catching their second wind where they're saying, no, I want to go higher. Get out of my way. Okay. So now we'll just have to see whether the futures overreacted. We're going to overnight of being bullish. We're going to have to see, did the interest rates, are they going to go up? And this is the intraday chart of interest rates. They have picked up and they ought to jump up at least halfway, if not 2/3 at least, this week. I'd like to see even a bigger recovery than that, and maybe the stock market won't like that. Right at the moment, we got the interest rates higher overnight, but the stock market's higher overnight. It's saying that's not a big enough change. The dollar index, a little buoyant, kind of didn't follow through from last week's weakness, and I think they're just kind of saying that's not a bearish enough thing right at the moment. Okay, so go back to the intraday chart here. And what I'm saying is if it's higher tomorrow, it might as well stay higher for a few days yet. All right. Whereas we do have an opportunity that even though the trade yesterday is distorting things for the model, it's these holiday, any futures trading during the day, 50% of the time it fits and works well with the model, and 50% of the time the model doesn't know what to do with it because it's basically noise, but it can distort some things. So they will tell us today as we open up at 9:30 and on into the close today, Eastern time, that If they want to sell it later today, then there's a chance they could back this off for a while, and it's still not ready to go to a record high. All right, and maybe it's ready to go down into late March, into April. But I just got to warn you, there's things going on here that the market may want to go up in the end of February on into early March, then down. That we can be too early of assuming it can go down for that long. I think that's another thing going on. People are saying there really isn't a reason to go down for several weeks. Not yet. They want to stretch that rubber band to the upside. All right, well, we'll leave it at that and take it one step at a time. I'll alert you if I see anything aggressive here today, but I think I just got to see what happens tomorrow to give me a clue on a very short-term basis, and I think I got to be careful here that it might bounce quite well in the next couple of weeks yet before it drops for that late March, April level 2 bottom. And keep an eye on all this news because it's mixed, it's flaky. But I think for the moment, the market is saying it's a little net bullish still. They just want to gamble until proven wrong. I think it's getting irrational. Right? And there's even some technical people that have been very, very bullish. They're now nervous. Okay. And I do think more negative news is coming, but it just may not be enough right now. Have a great day. Thank you.